basically a result of the modeling we're using to arrive at the dollar target. And so in 2019-21, the net impact is just under $1.2 billion in each of them. And then that grows to about $2.1 billion and then $2.3 billion in the next two biennia. The lines I have included on here are from a fund perspective. So the Fund for Student Success is estimated to get $1.6 billion in 1921, which is roughly a year and a half. And then that would grow to 2.8 and $3 billion in the next two biennia. The revenue loss side on the general fund starts at just over $400 million and then grows to $700 and $800 million. Now that revenue loss is composed of two pieces. About 70% of it is due to the income tax rate cut. And at that estimate started off at about $220 million a year. The difference, the other extra $100 million or so in the revenue loss, is due to the interaction of the commercial activity tax. And with the general fund, this tax would be deductible off the federal and then the state returns. So that tax adds a deduction to the income tax side. So there's a loss of revenue to the corporate income tax and the personal income tax through the deduction of this tax and how we're tied to federal law. There is also a projected loss to the general fund from the impact on the corporate retaliatory tax. As the insurance taxes kick up, the interplay, the complexities of how that tax works, we would expect a revenue loss. It was anywhere between $15 and $17 million a year on that. So all of those are combined into the general fund revenue loss pieces in that one line, rather than going into too much detail, just a fund perspective.